In this video, we are going to discuss about classification of accounts, which will be important in learning golden rules of accounting. As we all know, the first step in accounting is journal entry. For every financial transaction, we pass journal entries. What do you mean by financial transaction here? It means where money is involved in the transaction. Now, for writing a journal entry, we need to have an understanding about the accounts and its classifications. Now we will discuss about the classification of accounts. First, account is divided into two types. One is personal and other one is impersonal. Personal is divided into three types: natural, artificial and representative. Impersonal is divided into two types: real, nominal. Now the real is divided into two types: tangible and intangible. Now let us discuss in detail. Personal account. Any account relating to persons is known as personal account. The types in personal account is first one, natural person. Any human being. Example, Virat Kohli account, Prabhas account, etc. Next one is artificial person. It means the person other than human being recognized by law as a person. Example can be Reliance Industries Limited, A Limited, etc. The next one is representative account, which represents persons either natural or artificial persons or a group of persons joined together is called representative account. Example can be outstanding salaries, prepaid rent, etc. How this can be personal account? Like let us take all salaries account which were pending for payment from last 1 year are grouped into outstanding salary account. Other example, like future year's rent, like next year rent you have paid it earlier now itself, and we classify it as prepaid rent account. So these are the representative accounts examples. The next category is impersonal account, which does not affect any person. An impersonal account is divided into two types. First one is real account. In real account there are two types: tangible and intangible. Tangible means which can be seen or touched. There will be a physical existence. Example can be land, building, etc. In case of intangible, it cannot be seen or touched. There will not be any physical existence. Example can be goodwill, trademarks, copyrights, etc. Now the other one is nominal account. Nominal account relates to all expenses, losses, incomes and gains. Now let us see the examples of each and every account. Personal account examples. First one, capital. Like proprietor brings the capital into the business, so capital is always a personal account. Creditors, from whom we purchase the goods, will be a personal account. Debtors, to whom we sell our goods on credit basis, they will be personal accounts. Drawings, which we withdraw from business for our personal purpose, this can be termed as personal account. Now if we go to real account examples, real accounts can be land, building, plant and machinery, furnitures, etc. Now if we go to nominal account, all expenses like salaries, rent and incomes like interest received, commission received, etc. all are nominal account examples. Now we go to the golden rules of accounting. As we discussed, there are three types of account and the rules will be for the three accounts. First one, personal account. Debit the receiver, credit the giver. The next one is real account. Debit what comes in, credit what goes. Third one, nominal account. Debit all expenses and losses, credit all incomes and gains. Let us take a question and understand clearly the logic of golden rules of accounting. You can see the question. Try to answer this question. First, we will identify the accounts involved in the above transactions and we will pass accordingly the journal entries. Now you can see transaction. First one, Kohli commences the business with capital of rupees 1 lakh. Now here accounts involved will be cash is coming into the business in the name of capital. So cash and capital is involved. In the types of accounts, cash will be real account and capital will be personal account. Now explanation of the golden rules of accounting if you see. For real account, what is the debit? Debit what comes in. And for personal account, credit the giver. Journal entry will be cash account debit to capital account. Now if you see the second one, he purchased machinery worth rupees 20,000. So what is coming in? Machinery is coming in. And what is going out? Cash is going out. So here the both accounts for machinery and cash is a real account in nature. If you see the golden rules, debit what comes in, credit what goes out. So our journal entry will be machinery account debit, it is coming in. What is going on? Cash account, machinery account debit to cash account. And third one, he paid rent of building 35,000 rupees. Already discussed, expenses, assets and drawings will be having debit balance. So here what is paying? Rent. Rent is an expense. So rent account. By using cash he is paying the rent. So cash account. Both accounts involved. Rent account and cash account. Rent will be the nominal account. Cash will be the real account. Now if you see the logic of golden rules, debit all expenses and losses for nominal. Credit what goes out is a real account. So now journal entry will be rent account debit to cash account. He received commission of rupees 10,000. So here what are the accounts involved in this? What we are getting? Cash is getting into the business. By what name? Commission. Cash will be the real account and commission will be the nominal account. Credit all incomes and gains. Do you remember? So income, commission is an income to us because we are receiving it. So now what are the accounts involved? Cash is real account and commission is nominal account. If you go through the golden rules, for real account, debit what comes in? Cash is coming in. Credit all incomes and gains. What is the income? Commission. So cash account debit to commission account.